Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, December 14th, and we are looking at Window Trader's market profile of SPY, IWM, and Triple Qs. And boy, oh boy, does the market have a way of cleansing itself. It's just like the earth, right? With tornadoes and tsunamis, and it just cleanses itself. When the market gets too long, it whaps it out. When it gets too short, rips the shorts apart. So we had 5 days worth of weak longs coming into today. We gap lower, we take out the 7th low. Now we have all the longs on the water. We come down, flush out, fill the gap. Market gets too short as they try to push, and then you rip apart the shorts. But before we even did that, I had the best trade of the day by far in A period. We open, and this is why balance rules are so much more powerful than gap rules. Everybody yells gap rules apply. Well, if you took that short on the opening in A, you got ripped because it ripped from the opening to the day's high, which was over $2.70. And that's where I took a 200 put play in A, only to write it down. And really, I could have walked away after that because I just crushed it on that short in A period. That was a touchdown trade on the 466 puts. Didn't do anything until D. Once we had the single prints, started scalping D a bunch of times. The 463 puts at that time did well. Then in G period, when we started making new lows and not getting any tempo in F or G, I said I'm going to start looking for some longs. If they go trend again, I'll get out. Well, it didn't happen. So in G period, I took a 460 call and worked that back up. We had an 8 wide POC, never got 9 wide. And then the entire afternoon, JKL, all I did was scalp shorts. Didn't get hurt, even though we went all the way up. Scalp shorts the entire time. The 463s in J and K, the 464s in L. I missed one in M. We got right up to the 20-day moving average. First time I should have taken a put play there. I didn't do it, and you saw the way M backed off. We have a $5.49 range, and the only reference points I'm using is the day's high and the day's low. I use a 9 wide POC. I'm not going to ignore the 8 wide tomorrow, but if we don't get it tomorrow going forward, I will not carry it forward. Russell goes out with an afternoon rally high in L, high, low, 9 wide. They also came out of an inside week to the downside in I, J, and M, but closed right above it. But it is an inside week, so we still have 3 days to go. And the Qs also were looking like a double distribution day like us, took it all back. They end only 7 wide with the day's high, low. Their gap is bigger than ours from today. As far as destinations for tomorrow, on the upside, we have today's high at 465.74 and then filling the gap at 466.27. M's low from yesterday. It's a 53-point gap. Then we have the price probe, E&F's low, 466.76. 467.92, 10 wide. 468.63 afternoon rally high from yesterday. And 470.56. For the downside, we have today's low, 460.25. So we have $3 to our first downside destination. Then we don't have anything. This is where things can get really dicey tomorrow with the Fed. Below today's low, we don't have anything. We filled the gap from the 7th. Look at the 7th. There's nothing until that day's low, which is the weekly low, 453.56. Now the 50-day moving average is in there at 458 and change. Then we don't have anything to 451.90, 451.77, 9 wide from the 22nd of November. And then 448.92, which right now is a weekly low and so far this monthly low. So you want to talk about a price vacuum. Now, I expect major chop inside of today's range tomorrow morning in the first hour or two. Then I expect to dry up as we get closer to noon and between noon and 2 o'clock before the Fed speaks. Then we'll see what happens at noon with the announcement. Nothing much after that to the press conference at 2:30. But expect major chop in here. But if this market doesn't like what it hears, you heard my downside destinations. This market could rip lower if it wants to. Right now the daily is down. The monthly is balanced. The weekly is balanced. Now let's go to the chart real quick. So here's the daily. So what happened today? Well, plain and simple. We talked about this yesterday. We were on a 5-day balance. If you take it out, well, I even said a 4-day balance. I said if we take out the 9th low, your first destination is the 7th low. If that doesn't hold, what happens? Any acceptance below the 20, you're going to fill the gap. Check. That's exactly what they did. But that's all they wanted to do. We got rejected out of this other 3-day balance for now. Look where we closed, basically right in the middle. So everything's on the table for tomorrow. If the market likes what the Fed says, well, then maybe we take out today's high and get back into this 5-day balance. If the market doesn't like what the Fed has to say, we take out today's low, and then the next stop is the 50, and if they don't hold there, you're going to go see 448.92. That's basically on tap for tomorrow, one of those two scenarios. We also have options expiration and ex-dividend and SPY Thursday night into Friday morning. Come join us at camelbacktrading.org. You can see all the fun going forward. It's only $30 a month. Thanks for the likes and subscribing to this video channel. Enjoy your evening, and we'll speak prior to the opening tomorrow.